19th, and my name is Alejandro, and we're hosting another edition of Prop Desk Weekly. Normally we would host this at 3 p.m. European time, but now we're hosting it 1 hour later. That's going to be the new time for us. So just write down the time wherever you are in the world right now, and remember we're doing this weekly. So, who am I? Well, my name is Alejandro Zambrano. I've been trading the market since 2006, and I'm a market analyst and a trader as well. And I'm gonna give you guys some updates on what's been happening in the market from a macro perspective to help you prepare better and support your trading. Before we start though, as always, I need to stress that trading financial markets unfortunately is high risk and we may lose all of our invested money as well. I'm gonna give you my view on the market, and don't see it as investment advice. See it more of as educational purpose. So, what happened last week? So, we talked about the NASDAQ 100. Do you guys remember that? As I said, it could potentially push to the upside. Well, it did. It actually pushed up with 2.6% last week. And this was despite US inflation reaching 3% annually. And the reason for this is quite straightforward. The Fed actually downplayed inflation. So they said, don't worry guys, inflation is at 3%, but we don't really care. Another thing as well is that Powell dismissed the labor markets as a source of inflation. I don't know exactly what he's up to, but I suspect I know, because you see, non-farm payrolls wage growth increased with 0.5%. Okay, that's a quite strong move. As well, the unemployment rate went from 4.1% to 4%. Plus, you have deportations ongoing. So, as I said before, I think he's just afraid of losing his job. I think he's afraid of getting pursued from the US government and Trump. So I think that's why they're happy to wait, even though I suspect inflation is going to push to the upside. And it so far has. Another big thing as well is that Trump toned down the whole idea of putting tariffs on Europe. Now we're talking about reciprocal ideas. A tariff, sorry. And what's happening here is that when you say if Europe has a 10% tariff on something, then they're going to put 10% tariffs on then the US is going to put 10% tariffs on the Europe. So then it levels out. It's quite straightforward. But then that shifted again, and from yesterday evening, starting from April 22nd, they're going to introduce 20% tariffs on cars, chips, and pharmaceuticals. So anyone that wants to sell cars and computer chips to the US and pharmaceuticals would need to pay 25% tariffs. And the reason for doing this is because he wants firms to move their production to the US. So obviously, if you put 25% tariff, then you might as well just buy homemade because it's going to be the same cost. The problem is that the costs are still going up. Does that make sense? The long-term plan is, of course, that that's going to generate jobs in the US. We'll see if it works. There's a high risk that it doesn't. But yeah, that's what they're doing. And I think that's as well we're having a bit of sell-offs in the market. So what else? Russia-Ukraine peace talks. This is super interesting because just before the war, Russia was producing about 9 million barrels per day. They were producing 11 million barrels per day. But right now it's roughly at 9 according to sources at Reuters. And this can again boost, so 2 million barrels higher production if they lift sanctions. Now, I think it's going to be a bit more difficult because if you look at any of the comments, right now the Russians want new elections in Ukraine before making a peace deal. And as well, the Russians are not saying too nice things about the Europeans. So I don't know that even after this, that people want to buy. It's the same way as the Canadians. Like if you look up on Canadian TikTok and places like this, like the Canadians are still unhappy that the Americans want to turn them into the 51st state. So it's not a good time right now. It's not a good time. I'm sorry. I'm sorry. It's not that good. I'm laughing, but Anyway, we'll talk about that a different matter. But yeah, it's not good times. It's not a good time to be young, to be honest. It's much more difficult than it was before. Um, anyway, so this is a drag on oil. Okay, it's a drag on oil, bearish oil. The sum of this is that we had a weakening dollar, okay, despite inflation being strong. Crypto was flat. Nobody wants to touch that right now. Oil dropped, and gold hit a new record. And the way things are looking right now, UK inflation is also up. I think this is a trend we're seeing across the world. So I suspect gold will keep on pushing to the upside because you have a Federal Reserve that doesn't want to deal with inflation because they don't want to lose their jobs or get sued. So that's a big thing. In the terms of the NASDAQ 100, yeah, of course, the fact that they have these new tariffs is not a great opportunity. It's not great, but hopefully they're going to strike some deals as we've seen before. So maybe we shouldn't worry too much. At least they don't have, fights like 1-1 right now against Mexico and Canada, which is the key thing for the US right now. So I'm still bullish stocks despite this latest news. And I'm also bullish because I think we might get some sort of peace deal. Well, if you look at what people are saying right now, no, but things can change quite quickly. I think we're closer to having some sort of a peace or truce than some like a permanent thing. I think for a permanent thing, there has to be political change in Russia as well, I think. But yeah, I think what we talked about last week will continue this week. We'll look at the charts in a minute. Central Bank of Canada, New Zealand, they cut rates massively by 50 basis points to 3.75. As expected, they're cutting quite fast now. They had 2 quarters of low inflation. Their GDP is contracting by 1.5%, and their unemployment rate went from about 3% to 5%. So things are actually quite bad. This is actually not good. They're cutting too late. That's what's happening here. Otherwise, they would not cut this aggressively. Now, there is anticipation that they're going to cut a bit more. But the problem here from a trading perspective is that this data, or even the UK data, don't really matter right now. It's all about what's happening with the dollar in general and risk appetite in general. So what do we have ahead of us? Well, tonight we have the Fed meeting minutes. I wouldn't really bother too much with that. I don't think it's going to impact too much, if anything. Why? Because we just had Powell speaking to us last week. So whatever he said then is a fresher take with more data than what happened at the last meeting. And then we have Aussie unemployment figures, and then we have jobless claims. And then on Friday, we have a bunch of PMI data. But the PMI data here, just bear in mind, it's not really that relevant because it's the second estimate, not the first estimate. So it doesn't tend to be any huge changes. So with that in mind, I would anticipate that whatever mood that's happening in the market, that's kind of what's going to prevail. I don't really see things changing here. So let's take a look at the charts. So this is the Euro USD. Okay, so last week we said to be bearish here for this to go down. And bear in mind, I've been bearish since the election, and even before that. But on the election day, we did a special presentation. I did a special presentation where we said look to sell. And we've been very right in that view. And from a fundamental point of view, I still think this is going to go down. I think it's going to go down to 0.95. But, as a trader, we need to accept that the charts sometimes want to be bullish, even though long-term is bearish. And now we're just trading sideways between 105.31 and I would argue 102.11. And I wouldn't have a strong view here, but it is possible to sell sort of around 105 with stop loss above 105.50 and then target the downside. But I would be very careful. This is not a strong trend. And last week, the view got stopped out. So here's Brent. So Brent is around this level, which is 76.20. So below, from that level, all the way up to 77.23, I am bearish, okay? Now, the thing with trading is that you normally hear when people thought, oh, like probability of peace and all that was far away, that was the best time to sell. But now there's clarity. There will be some sort of deal happening. Maybe that's priced in. I'm not really sure 100%. But given that we're closer towards peace than not peace, I would be bearish below 77.23. If we break above it, we go up to maybe 79. How about the S&P 500? Sorry, NASDAQ 100. Should be NASDAQ 100 up here. So this is a big rectangle pattern, and you have the breakout that we discussed. I bought myself on that, and as long as you trade about 21,711, I want to push to the upside. If we go down to these levels, I think people are going to be buying in. Again, the rationale is very simple. The US starts out very strong, aggressive, and has trade war with Canada and Mexico and US and China, Europe and China. Okay, those are the big ones. These ones now, that trade wars are on ice. You have a central bank that does not want to deal with inflation. Very good as well. And now, of course, you have some tariffs coming in, but the big headaches are gone for now. There will be a time, especially if inflation goes crazy, but given how slow the Fed operates, we may be looking at 3 to 6 months from now, where they're going to be like, oh, we're behind, exactly like the New Zealand Central Bank is right now. Okay, so that I think can potentially allow the NASDAQ 100 to push the upside. How about gold prices? So we talked about last week to buy here, that went fine, and here, and that went fine. And I think we're going towards that 3K mark. It's like a magnet. People just want to target it. And I think if we would dip towards 2,909, but don't trade below 2,861, which is this low here, then I think people are going to keep on buying. Will we hit a peak soon? I think we're going to hit a short-term peak at one point. Part of my job is to talk with the press a lot. And there's been a lot of requests on what's going to happen with gold. When people sort of get too curious about gold, then that's usually when the time is over. For an example, look at Bitcoin. Bitcoin, heading up here, there was a lot of talk. Friends I haven't spoken with for many, well, acquaintances I would argue, that I haven't spoken for a long time. They're asking me, oh, should I buy Ethereum? Should I buy Bitcoin? Yeah, you should have bought Bitcoin when Bitcoin was, 1.5 years before, when it was much lower, around 30K, not necessarily 100K. So that's maybe the same thing that is happening in gold. Again, people asking me, should I buy? Should I buy? It's a bit of a warning sign. Now, as for gold on its own, Bitcoin, it is bullish between 93K and say 89K. Above here, we can go up. But you are very experienced, my friends, saying, if we break here, we trigger all these lows, and then we can go down at roughly, I think it's about 70K or something like that, 80K at least. And that's going to kill all the altcoins. If you look at Solana, it's already bleeding. It's now at 43-45%. And you had ADA and all this stuff that just can trade below the lows we haven't seen for many years. So it's not a great opportunity. However, if we bottom out of here and you have a lot of patience, then that could be a good one. My preference would be either buy here. My preference is not buy here. My preference would be, my preference 100% is not in Bitcoin. But if Bitcoin can break this downtrend, then check out Litecoin. Litecoin is looking really interesting. So I am bullish, but not necessarily in Bitcoin. But I definitely want to buy. So anytime we want to buy an altcoin, Bitcoin should be at a buy level as well. But right now it's just trading sideways, just being messy. It's very difficult. And just creating a lot of drama. A lot of losses, I would say. And with that, let's see if you have any questions. So there's more people here today. I love it. If you like the stuff, then please keep on joining me. If you don't join, I know you don't like it, and then I'll do something else. Let me see here. I'm gonna log in on YouTube, see if there's any questions. Sorry.
you wondering what said? Are you wondering what said?
So on. Okay, a lot of people here. Oh, amazing. We got Armani, we got D, Vicky, Taran. I'm horrible with names. And CDFX. Good amount of people here. All right, let's see if there's any question here. And then I'm gonna go on the Twitter feed. No worries. So how is again the ongoing how will the ongoing peace talks affect commodities? So I think in general, just to give you an idea. So the Russians were producing around 11 billion barrels per day before the war started. Okay. Afterwards, that has moved down to almost 9. Now you have OPEC plus, which includes Russia, but includes Saudi Arabia and all of the big oil producing nations. They plan to increase production by 2.5 million barrels starting from April. And they tend to do this slowly over 18 months. So their plan is to augment production by 2.5 million. Now, if for the sake of it, imagine this peace today, no sanctions, then Russia would be probably very keen on propping up or pushing production up. So effectively, whatever the whole group wants to do, that is what's missing from Russia, and that is what might come online when we have this truce. So effectively, a flood of oil, and I would assume that oil markets would trade much lower, and as well I would argue that the NASDAQ 100 is going to gain, and the stocks in general is going to gain because it's going to be cheaper to produce things, really. And then the effect as well, like I'm not going to look at copper chart right now, but if you have things like copper, for example, if oil comes down, then you should have a higher world production, higher economic growth in the world, and then obviously that could affect copper in a positive way as well. Rob says tough trading since Trump inauguration for me. You know what? I agree. I was around when Trump was president last time, and it was quite annoying actually, because I remember very well, because I was doing things like I was opening a couple of positions in oil, and I held them for a couple of days, and then I was getting on a plane because I was going on holiday with my family. And then what happened is that Trump tweeted while I was on the airplane, and then by the time I left the airplane, I was stopped out, so I lost that position I've been holding for a couple of days. And that was very typical, because back then he used to intervene via Twitter all the time. He would be like, I don't like this, market crashes, I'm gonna do that, market crashes. So it's much more difficult to get some sort of trend. And I think with the information we need to learn here is we just have to be much quicker. We need to be much more short term. So I don't know if you watch all the content that I produce in different channels, but I did talk as well about buying dollar CAD. And I got stopped out in dollar CAD just before the weekend, so I didn't hold on to it. But what's interesting is that if I would have held on to it, I would have had a nice profit. But normally what I would have done is I would have kept it, because if the actual trade war would have kicked in, it would have, destroyed the US and Canadian economy. So, well, not destroyed, but, recession-like or very slow growth, especially for Canada. So, of course, I'm going to sell the Canadian dollar. So I would have kept that for longer for a big profit, because I know that if I have a big profit, that can cover like months of losses, right? But what happened was, as you know, dollar CAD went all the way up, and then within 24 hours, it was all the way down. So I would have lost on that. So long story short, I think you just need to be much quicker on taking profits. Let me see here if there's any more questions. News today are not that effective. I think Non-farm payrolls makes sense a lot. But yeah, it's definitely been, and central bank meetings, usually you can create and trade around those. But I agree, it's not as before, because now what's dominating is what the US government is saying. We got a question if we can look at yen. Yes, we can look at yen. So let me load my charts. And then we ask if we can look at the euro. Yeah, we looked at the euro. Yeah, you're right. Yeah, what you should try, you should follow Trump on Truth Social. Truth Social is really good. Well, it's good if you want to follow Trump, okay? So that's what I can say. Okay, and let me also load just the Twitter feed. I just want to see so we're not missing any people's questions. I'm gonna load the charts in a minute and we can look at them. Okay, so we don't have any questions in the chat. No, we do have. We have amazing info. Thank you very much. All right, good. Let's load the charts and then we can take it from there. So we had a question on dollar yen. Okay, so this is dollar yen a daily chart. So what is quite interesting is that in the case of the Japanese yen, the central bank is actually increasing interest rates. They have inflation that is a bit too high. Let's go to trading economics and I'll explain to you what I mean. So for Japan, inflation is at 3.6 and jobless rate is at 2.4. So what's happening here that anybody that wants to work pretty much has a job. The Japanese society anyway is very, very special. You don't usually get fired, all right? You don't. They just reposition you and do all that stuff with you, but you don't necessarily get fired. But it is very low already. And then you have inflation increasing by 3.6. And this is an adjustment that is coming, and normally they would have negative inflation. Okay, negative inflation. Not always, of course, but you have this massive move. So they're increasing interest rates. So in general, we want to be buying the Japanese yen. That means we want this to go down, right? So from a technical point of view, so I always work on the big picture and then we go smaller. How can we adjust this properly? I think, okay, we're not going to complicate it too much. We know that we're dealing with a central bank that is raising interest rates. The other one is taking a break, the US central bank, right? So I would argue that this is realistically going to come down a bit more, and you can always sort of try to narrow it down, but I say probably a break to 150.93 would open for a move to the downside. I think from a tactically, maybe down, and then when you have that bounce, sell. So maybe that would be the preference. Now there are some conflicting signals here, and one conflicting signal is the fact that dollar yen usually goes up when stock markets go up. So in the case of the euro, as I said before, I think we just want to be selling. I would prefer to sell more than anything else. Effectively looking to sell sort of at higher levels and just be bearish here. But I am not in 100% in tune with this market right now, so I wouldn't really listen to me too much in terms of this market. Rather, you know, I've been very, very good on gold and silver. I think there's some good value here. Looking to push this to the upside. I think that's quite straightforward. Like if you look here at silver, for example, we were literally capped by this level, which is 32.20-ish. So we're capped there for a long time. We had a breakout, retest, and realistically, the next major level is up here around 34. So I think we are on dips. I would just push this to the upside. So here, for example, trend defining levels is realistically at 32. And then I will probably just be bullish where we are and trade this to the upside. You might say, because I know if you're trading with Think Capital, I know you have like different parameters to manage. I'm a bit different, okay? I don't necessarily, I trade a regular account, okay? So I have the possibility to take more risks, really. But yeah, I think the way I operate, let me explain as well. So the way I operate is this. So normally when people trade, they say, oh, should have a risk reward ratio of, 1 to 2 or 1 to 1 at least. So if you look at this, you're gonna be, okay, this is not the best risk to reward ratio. And I agree. But if we are right about the trend, which I'm usually am right about the trend, then this is probably gonna bottom out here and then we're gonna go up. So in other words, if I can reduce it like this, then what you'll see is that at least sort of 40% of the time I can reduce my stop loss, okay? So because I can reduce my stop loss, my effective loss is only 60% of the original loss, the anticipated loss, okay? So if you do it like that, and we revisit the high, then you're looking at a risk reward ratio of 3.4. So that is the way I operate. I do have wider stop loss orders. I do let my positions take a couple of days to develop. And if I'm right about the trend, which usually I am, I can reduce my stop loss. And because I can reduce my stop loss, whenever this goes to TP, if you look at the average risk multiple, then it's usually much higher than a 1 to 1, around 3 on something like this. Okay, let's see if we have any more questions. All right, so we're gonna wrap things up. We don't have any more questions. I wanna thank everybody that joined. I am really enjoying this. I did this last week. I think it was like one person here. So now we have so many of you guys here. Super exciting. And I wish you happy trading, best of luck, and I'll see you next week for the next update. Thank you, and